2022 past paper question. This is here in front of you. So I would suggest to you, please open everyone this exam kit. Read requirements first. Understanding the requirement is the first thing in the right direction. The first requirement is explain the role of World Trade Organization and assess the implications for the Prysor Company of Free Trade Agreement between Elan and M in the context of WTO requirement. This is very easy question, 4 marks it is. There are 2 requirements in it. And role of WTO and, so 2 marks each. B part, prepare a report for the board of directors of Prysor, which evaluates the financial acceptability of investment in Elan, 17 marks. Discusses the assumptions made with respect to calculation in above. Assumptions. You know, one of the favorite question of examiner, theoretical question. Although it is 5 marks only over here, but sometime it is up to 10 marks. And we will talk about it today. Now, calculate the investment duration. The percentage change in selling price required. Now, what is it? This is sensitivity. Discuss the significance of and concern with the calculation in B3, this one, duration and this, significance and the concern as well, and professional marks are there. So, students, we'll proceed towards solving this question. Remember, when we are moving towards the scenario reading, we must have grasped requirement. Requirements are not that we have read the requirement and now we will move. No. Requirements must be in front of us. So, basically, if I open word processor, in the exam platform, you have word processor like this. I've opened the word processor. So the first requirement is, just a minute, please. Yes. So A part, role of world trade. So that I need not to open it again and again. This question exhibit. World Trade Organization. And the second part is implications organization, sorry. And implications for for Prysor of the free trade agreement. among Elan and Martech. So these are the two requirements we have noted down. The first part. B part is the prepare a report. The report is to the board of directors of Prysor Company. In the report, we have to write the format first. We have to make format here. Introduction. When we make a format, we will be clear about how to proceed, what to write, what to do. Please do this after reading a requirement first of all. Introduction paragraph. Then, here is the first theoretical assumptions. Yes. Assumptions. Then, the next is significance of the calculation make. So, assumptions, and significance of duration. Significance of sensitivity analysis. This will make your life easy for sales, selling price. Yes. And the final heading is conclusion. Yes, conclusion. So these are all headings which I have given here in front of you, like this. These are all headings. And the next is appendices, because we have to do calculation in spreadsheets. Attached in spreadsheet. Simple is that. At that. I hope you got the idea. Now, we will be opening spreadsheet here. We'll be opening spreadsheet here. And the first appendix is linked to financial acceptability of Elan. So we'll be starting with the appendix 1. That is financial acceptability of Elan. It is, we can write its question part as well. B's, we can write here, yes. Part B first. Like this. So, of investment in Elan. Like this. So let us now start reading the scenario. The following exhibits available on the left-hand side of the screen is CB exam, provide information related to question. Okay, Prysor is a multinational company based in country of Malteg, currency $. company is considering establishing a subsidiary in the country of Iran to manufacture and sell a new model of mobile phone. Iran has free trade agreement in place with a number of countries, including Maltag and World Trade Order terms with other countries. Now, only this information is available about it. Although you should read the remaining, but I'm telling you based on my experience over here, there is only one paragraph small available for the first part. So first of all, what is WTO? It has two parts. Yes. Role of WTO. So, World Trade Organization, you have to write complete. World Trade Organization, WTO. Has an aim to reduce barriers related to international trade among different countries. Yes. So by preventing protectionist measures and quotas, etc. One mark done. We need to write for 2 marks. Okay. Secondly, it is a forum of negotiations as well, and a place for dispute resolution among countries. Yes, related to trade. Related to trade. So 1 mark per valid point. Done. Need not to write more than required. Okay, next. Implications. So they are going to invest in the foreign country. Prysor. So that's why I said just go through it a bit. So anyways, I will be telling you. So the principle of free trade will help Prysor to start it and continue its project without any serious concerns related to its project, such as, now we have to tell whatever we say, justify. one rule of professional marks. Let me open a Word document, which I'll be using throughout the crash course. So whatever you claim, justify with explanation or financial data in the scenario. Okay, these are the rules for professional marks. Now, such as there will be no restriction of movement of goods and services among these countries. First of all, so now, students, the scenario tells, there is yeah. So now linking to the scenario. So if Elan has to move, so if Prysor has to move its staff or transfer some raw material from Elan to Maltech for free trade agreement will help in free movement without any restriction or tariffs. Yes, it will help them. And same is the case if any sales have to be made by, first of all, staff or raw material by Prysor in Maltech, it will face no restriction or minimum or to the minimum. Done. 2 marks, done. Applied to scenario. So basically the relationship between the both. Now, financial acceptability of investment in Elan. Financial acceptability. Prysor Company's board has a 4-year time horizon for investment in Elan, though the subsidiary may operate for longer. The board will also consider an offer for subsidiary as a going concern. Okay, so sales units are given, sales revenue, ED 000. The sales figure have been calculated using the assumption that Prysor will charge a unit selling price of 160 ED in year 1 and increasing the price by 5%. from year 2 to 4. So this has been calculated using this assumption. Okay, this is assumption. Remember assumption. Assumption. So what I'll be doing immediately, I will reading selling price increase. I can discuss it later on. In exam, you can even copy paste. From left side, you copy and paste over there. And at the end, you can trim it and discuss it. Okay. The new phone will require a component made in Martech and charge at a transfer price of $7 per unit in year 1. The transfer price will increase by annual rate of inflation in Martech in year 2 to 4. The parent company will achieve a pre-tax contribution of 35% of on sale of component to the subsidiary in Elan. So they are investing in Elan basically. Okay, investment in Elan. The investment in the new phone is likely to mean the loss of future sale of an existing phone. Okay, this is opportunity cost. If the new product is manufactured, the pre-tax contribution loss from the sale of, yes, the existing phone will be expected to Martech $400,000, right? Now, so then basically company is in Martech and they are going to launch in Elan. You see here, increasing by rate of inflation. So other costs are here. Immediate investment in non-current asset will be ED. This is currency of Elan. The realizable value of non-current asset at the end of year 4 is expected to be this, assuming that subsidiary is not sold as going concern. Another assumption. Okay. Tax allowable depreciation is deducted from the tax profit in the first 3 years of the investment as follows. Tax allowable depreciation. Okay. ED. The next is the balancing can be assumed to be available at the end of year 4 on the basis of forecast net realizable of value of the asset. That's good. Next. Prysor company will pay tax 20% in Elan and it exempt from any impact of taxation in Elan in the first 2 years operating there. All post-tax cash flows will be remitted to the Prysor in Martech. Prysor company pays tax on profit at an annual rate of 30% in Martech. A bilateral tax treaty exists between Elan and Martech. Under its terms, Prysor will be assumed to have paid tax at annual rate of 20% in all 4 years. Tax in both countries payable in the year tax liability arises. So sufficient working capital available, no further working capital needed. These are inflation rates given, current exchange rate given, discount rate is given. So life is going to be very interesting now. So what I'll be doing, so let us do this. So first of all, we have to do 2 parts. One is here and the below is working. And below will be working if any to be done. So first of all, that is year 0, 1, 2, and 3, and 4. Sales revenue. That is in ED 000. Okay. So I will write here ED 000. Same here. 3-digit round off. So sales revenue is 8,000, 10,920, 14641, and 16670. These are the sales. Next. Now, this is the calculation. Component cost. Component will come from Maltech and they will charge $7 in the year one. And transfer price will increase by annual rate of inflation in Maltech. And of course, there is contribution as well. So in the working, component cost, working one. So year 1, 2, 3, and 4. Yes, per unit. Maltech dollar. That is $7 in the first year. Okay. And then inflation rate. What if I do a favor to me? I will write inflations here because it is going to help me. Inflation in Maltech and inflation in Elan. Okay, because it is to be used in the calculation again and again. In exam, you can simple copy paste. If you know, you can simply copy paste. This is the year. That is 6% in a Maltech, 10%, 9%, and then 8%, and then 7%. In Elan, it is 6%, 4%, and 3%, and 3%. So, per unit cost in dollars, this 7, we have to increase it. Yes, into 1 plus this 9%. Okay, I have applied a formula. Now you will see the magic. You'll see the magic. Yes, simple is that. Because the formula is applied. Inflation. Now, per unit. That's why I wrote these inflation rates here. Okay, it helps. It eases our calculation. Now, so how many number of units are there? Because component costs, they say the new phone will require a component made in Maltech. New phone required and charged at a transfer price of this. Each phone, how many units? 50,000 units. Yes. So number of units of phones, 3-digit round off, we know. 50, 65,000, 83, and 90. We can write here, 3-digit round off. Yes. So total component cost in $. Focus everyone. This into this. So component cost in $, 3-digit round off. Yes. Any confusion so far? Any calculation? If you face any problem, do ask. The next point is, now this has to be paid by, this has to be charged to the product in ED. So exchange rate we need to calculate. So exchange rate. Remember, we need to calculate through purchasing power parity theory, if you remember that. What is the current exchange rate? Right now, it is 2.6 ED per M dollar. 2.6. Now, purchasing power parity theory. Current spot rate. Yes, this into what is the first currency? Elan. 1 plus the first currency is Elan. This Elan inflation divided by 1 plus inflation of Maltag, the second currency. Purchasing power parity theory. And we simply move like this. They have given us idea that 4 digits we need to use after decimal. This is exchange rate calculated. Okay, so component cost in ED 000 round off. M, if we divide or multiply, what to do? Multiply. You see here, this is ED per M dollar. And this price is in dollars. So dollar cancelled with the relevant exchange rate. 877 multiply. Yes. Here you go. If the exchange rate, if there is any confusion, you can ask before I proceed. ED 000. So the working one is done. That is less component cost. That is equal to minus. These working has their own distinct marks. Remember that. Now, the next point is, so what is the any other cost, any other variable? Other costs are here. So we have discussed this component cost, other costs. After taking account of inflation, we need not to inflate them. So negative 3508. Negative 4934, negative 6230, negative 6685. Now, what is next? If you know the pro forma, we have to calculate taxable cash flows for a project. Sales minus costs. Yes, for the tax saving, we need tax allowable depreciation. And our luck is they have given themselves calculated, which is quite rare. So tax allowable depreciation minus 3615 minus 2711 minus 2033, and at the end minus 2701. So taxable profit, nothing, zero. So taxable profit is here in front of you. Yes, zero in the first year. Okay, but there is another problem. The tax has to be paid in Elan at the rate of 20%. Yes, it is exempt in the first 2 years. No taxation. So 20% in Elan. So no tax here. And minus 20% into this. Yes. Here you go. I always do, make it bold. Taxable profit. Why? To avoid confusion later on. Normally, when we don't do it bold at the end, while calculating net cash flow, we calculate the whole column, which becomes incorrect answer. Net has to be done from the now taxable cash flow. Follow means beyond that. So add back depreciation, which we deducted. We have to add back this depreciation. Next, investment and any residual value. So investment is 14,460. 14,460. 3D round off. Residual value is 3,400. The same investment will have a residual value of this. So net cash flows. These are the net cash flows in ED 000. Before I proceed further, any single point which is bothering you, I'm here to re-explain. Tell me. This is the working which has been completed for foreign country, Elan. Now we have to start working for Martic, home country of Prysor. If there is any confusion, you can ask, please, before I proceed. Yes. All clear? Tell me, please. All clear? Next. Thank you. The next point is, yes, Now, these cash flows have to be remitted. These cash flows have to be remitted. So I will write here Martic dollars 000. Yes. So cash flows in Martic dollar. There is no remittance restriction. And we have to convert these cash flows using the exchange rate we calculated here. This one. Okay. Now, so students, just see here. Elan divided by Elan per ED. ED divided by ED per Martech. Then we get answer is, we need answer is Martech. ED divided by ED per Martech. These are the cash flows. And yes, here you go. Now, what are the additional adjustment? Instantly. Component contribution, which they're selling. So just see here. The contribution on component they're selling is how much? They told us here. 35% pre-tax contribution. So I'll be calculating here contribution on component working 2. Yes, year 1. So this is the component in dollars. They are selling in Martic dollars. Okay? Into 35%. For the home country, it will be in dollars. Yes. Now, student, post-tax contribution. They have to pay tax on this component. So tax in the Martech is 30%. Yes. Okay, leave it here. We will show it there over here. So contribution. On sale of component. That is equal to this contribution. Now, tax payment on contribution. That is minus 30% into this. This is the tax payment on contribution. Now, what else? Students, there are 2 things more. That is a double taxation. And there was, if you remember, I told you there is opportunity cost. They will lose this revenue in year 1. increasing by rate of inflation in my tag. So the point is lost contribution due to the project. That is 400 negative. This is outflow. Increasing by rate of this into 1 plus inflation rate in Martech. And so on. Lost contribution. So tax saving on loss, because you lose contribution, you save tax. That is equal to 30% into this. How? Because you reduce contribution and you don't pay tax on that. Why it is negative? Okay, right. Tax saving, basically. It should be positive cash flow. Now, additional tax in Martech on project cash flows, we have to calculate. Working 3. Additional tax. Additional tax. Students, year 1, okay, it is here. So we have to write taxable profits in Elan. Very easy. Now, there is a point. No, it was exempt in the first 2 year over there. Listen, assumptions, issues. A very important issue came to my mind. Tax exemption in Elan in first 2 year and its impact in home country. Now, the point is, you cannot link things like this if you don't grasp the requirement initially. If you are not fully engrossed in the question, things are popping up to my mind when I'm reading, and the other parts are being linked. Now, so come here. So taxable profit. So at these, yes, X in Elan, 000 ED. So taxable in Martech in M dollar. Now this will be converted at this exchange rate. This divided by exchange rate. The same amount taxable in our party, now 10% additional tax. This into 10%. Yes. This is the additional tax payment, 10%. Yes. So, that is equal to minus, link it. Question is almost done. Net cash flows. Now, what is the cost of capital? The 14% discount rate. So present value at the rate of 14% equal to this into 1.14 raised to power minus, we linked it with the number of year. Yes. So NPV, net present value. That is equal to sum 960.4 million Marteg dollars. This part is complete. Evaluate. We have to tell the decision as well. The project has positive NPV. So it is financially beneficial for the Prysor company, and it should be accepted. Done. So this 17 marks calculation is done. Now, so students, what are the assumptions? Assumptions are given within the scenario. For example, just see here. Sufficient working capital is assumption. I'm just going to give a quick overview. How many marks assumption part has? It has 5 marks. Okay. All cash flows. The assumption is there. We will see. And the next is, sorry. WACC, cost of capital. Exchange rate calculation. Now, I will be discussing it. Don't you worry. I'm just noting down the points which are coming to my mind. And one point is, that is, how many points? 1, 2, 3, 4, 5, 6. Enough. So let us discuss it. Students, one by one. We have not to write bullet points, remember. Never write bullet points. Second rule. Bullet points or incomplete sentences. Or incomplete sentences. Never write. You have whatever you write, discuss. So, the project to be launched in Elan has number of cash flows such as sales figure, costs involved are assumed to be accurate. Yes. And the fact is, these are estimates and have uncertainty attached with. A significant change in one or more variables or small changes in all variables can make project not worth project can make project not worth to consider. That is, with a negative NPV. Yes. Next. Second point. Second point. Selling price increase is also incorporated in it. That is increasing 5%. Second point is tax exemption. So while calculating the cash flows of the project for Prysor in home country, the company may have to pay full 30% tax in home country as the exemption of tax is available in Elan, and it may be fully taxable in Martech. Yes. While here it has been assumed that only assumed in calculations that only 10% to be paid in 2 years, in first 2 years in home country. Next, it is done. It is assumed that company has sufficient working capital in the project already. If I'm not wrong, just a minute. What was the statement exact? Working capital. Yes. But It is a new project. In Elan. And for this specific project, some amount has to be assigned for working capital in addition to investment in machinery. Yes. In non-current assets. Yes. Friend, this is called commercial acumen. And this is called skepticism. How we are questioning their assumptions. Commercial acumen, we are practically telling that 30% tax over there and 10%, hey, you are only accounting for tax 10% in the home country in the first 2 years. Tax exemption is there, but in the home country they charge difference. So the government may say, okay, you have not paid anything over there, bring to pay us 30%. Possibility is there. Commercial acumen, working capital is required. Practically thinking. And we are utilizing the data from scenario to boost our discussion. This is called analysis and evaluation skill. So you have not to write anything additional to secure professional marks, because you are already doing that. Got it? Next. The next is cost of capital. Yes. The cost of capital, they say, should be used for to assess that what is the basis. Yes. So the cost of capital of 14% is used for the project evaluation without any logic or basis given, explained. The fact is that the project in Elan may have different business, different risk attached. Yes, business risk. And if 14% is current cost of capital, it may of company, of Prysor company, it may not be suitable. You see, I have not written a single sentence from my side. We are doing evaluation of assumptions of what we have done based on our AFM knowledge. Framework is the AFM, but we're applying it to the scenario. Okay, now the last one, exchange rate. So exchange rate has been calculated using purchasing power parity theory. Exchange rate calculation for conversion of cash flows is done using purchasing power parity theory. Based on assumption that based on assumptions that exchange rates will fluctuate based on inflation rates of currencies. And practically, exchange rates are affected by so many other factors. And the actual exchange rates may not be same as being calculated now. Hence, affecting the cash flows may not be same as predicted cash flows based on actual exchange rate as predicted now. So 5 points are done. 1 point I did not discuss. There is another point. Never discuss more than required. So 6 point was over here, which I was reading when I was reading. Yes, assuming it is not a going concern, assets are sold individually. It is too pessimistic. A very small amount. Okay, so this selling price may be different, and this project may be sold. Project may be sold practically. You can write this point as well. As a whole project. This is scrap value. They have considered the ultra pessimistic thing. Now, the next part of the question is, so this is done, assumption. Calculate the investment duration. 2 marks. Okay, we will do that. We will do that. Duration of the project. So, students, B's third part. Duration we need to calculate. So what we will be doing, we will be picking this cash flows from here. Year 1, 2, okay. Year 1, 2, 3, and 4. This is the present value of cash inflows. Sorry. Yes. This is the present value of cash inflows. And this is Martig dollar, 3-digit round off. First of all, we calculate present value of cash inflows of return phase, if you remember. Then what to do? Total present value. Of return phase. Now, weighted average equal to this divided by this total value, 6522. The next is, yes, multiply with relevant year. This into this. Duration. Now sum of all these. $2.86. So how to interpret it? It is the time to recover the present value of, this is average time, value of the project, and as it is more than half of life of project, it indicates, so majority cash flows are in later years of the project. Simple is that. Next, the next part is percentage change in selling price. Sensitivity. Yes. So sensitivity is here. Selling price, initial selling price. Okay, how to do this? Students, sensitivity of NPV towards selling price. What we do? We must know the formula. Sensitivity is equal to NPV over present value of post-tax variable. Post-tax variable. Now here a bit technicality. Here it is a different type of question. I have chosen it for the same reason. Because there is no such question you get, such complexity in the sensitivity. So one thing is it is covering three topics, four topics. So I have chosen it for the same reason. So what we have to do, first of all, we have to calculate, and we have already calculated. We have to calculate variable. So year 1, 2, 3, and 4, sales. And sales are ED. If you remember, sales are in ED. This one, 000. Now, post-tax sales, 20%. Okay, for your understanding, tax on sales. I could have done it directly. 20% in the ED. Zero. The first 2 years, zero tax. 20%. Yes. Now there is exchange rate. So once again, we have to convert it. Sorry, we have to calculate post-tax variable, post-tax sales in ED 000. This plus this. Now, student, we have to convert into M dollar, Multic dollar, whatever it is. Okay, so exchange rate. ED per M dollar. So exchange rate I have calculated above. You see how beneficial it is, this exchange rate calculation. So always note down things like that if you get such question. Inflation and exchange rate. So it is very easy to link. Now, so now it will be sales in M dollar. 3 round off. So this divided by this. Now, additional tax in Multic, that is 10%. Now, so the next is net post-tax sales. The next point is present value add. Now, present value. Now we will take present value of post-tax variable at the rate of 14%. The discount rate. This into 1.14 raised to power minus this. Yes. So total present value of post-tax sales. Yes. Now the next point is sensitivity. Now we can calculate NPV of the project. This divided by 8%. 8%. So they say the requirement was calculate the percentage. By the way, with the duration, we should not have commented. Okay, because they didn't ask us to comment. The cell calculate only. So this comment is not needed here. Calculate only. Only calculate. It was additional. Okay, right. So calculation is done. So this is basically sensitivity or the reduction in selling price to make NPV 0. Next, so calculation is done. Now, significance of and concerns with both. We will be discussing it now. Significance. Come here. Yes. Significance of duration. How many marks? Always check your marks. 3 marks. So 3 valid points for duration, 3 valid points for sensitivity analysis. Now, so here we will write that duration of the project is 2.86 years, which means it is the time to recover present value of the project. It is the average time. Again, I missed average. Average time. It's average time. So students, duration, significance. Duration means significance. Considers time value of money of project cash flows. So it is superior in this terms as compared to payback period. Yes. Moreover, it helps to consider full life of the projects and it's all cash flows. All cash flows. Now, to students, moreover, duration has some, however, some downside as well, that it may lead to encourage investments with shorter duration and the company's business may lose the long-term focus. And lastly, although for 3 marks, it is almost okay. 3 points we have made. And the lastly, what should be the acceptable duration of a project? It all depends upon the judgment and risk aptitude of the directors of company. Yes. Now, so this duration's importance and its concern as well, company. So it may involve, so decision making based on it may involve biases of directors as well. Duration. Now, significance of sensitivity analysis for 3 marks. So, the results of sensitivity analysis of selling price indicate that if selling price falls by 8%, it will make NPV of the project to 0. Zero. But there is a point, which means company has to take care of it while setting or deciding pricing for the project. Products. Now, there is one factor to be considered, however, that sometimes reduced prices results in increased sales volume as well. So Prysor company should consider, should take that into consideration, that it may reduce price by a small percentage, such as, for example, by 3%, to increase sale by 10%, assuming. So it will be net beneficial for Prysor company. But this aspect is ignored by sensitivity analysis. Yes. Moreover, NPV is not solely affected by change in selling price, but other costs of the project as well. Other costs as well. So, Prysor should analyze the sensitivity of NPV towards other costs, other variables as well, and create different scenarios for assessment of project. Before making a final decision of the project. Done. Now, further, there was not so much technical in it, what I have written here. It is simply the drawbacks and advantages of duration and sensitivity analysis tailored to this scenario of it. No rocket science here. So now we have to write introduction paragraph. An introduction paragraph is basically introduction of what we are going to discuss in the report. So this report includes the assumptions used in the calculation of NPV of project in ELAN. Along with calculation of NPV, duration, and sensitivity of project NPV towards selling price given in appendices. Yes. And then followed by, moreover, significance of the sensitivity and duration has been discussed. Now, students, we have to now conclusion. So it is done, introduction paragraph and conclusion paragraph. Summarizing everything in few lines. Conclusion paragraph. So the NPV of the project is positive. So it is financially beneficial for the Prysor company. But it is based on multiple assumptions. and forecasts which should be considered carefully to proceed with the project. Now, additional sensitivity analysis and simulation. Simulation should be performed ideally for the project. Okay. Now, there can be non-financial reasons such as some strategic outlook of company, improving the business profile, etc., can be the reason directors of Prysor may consider while making a final decision about of this project. Done. You see, I have not written anything technical. Yes, it's quite easy. Any confusion? This question is complete. So Prysor company, I'm saving it. This question is done. So students, it is time for a short break of 10 minutes. We will be back and we will continue towards next question. Just 10 minutes break.